Never in my life would I think that a 3-digit number would have a tremendous impact to my life as it does. Essentially, this 3-digit number can make or break your finances and impact your financial decisions. Your credit report is important because it shows lenders your payment history, your overall credit mix, and if your accounts are in good standing. This allows lenders to decide if the borrower, in this case you, will be able to repay the loan back on time. People with high credit scores will qualify for more favorable loans that will save them more money. If your credit score is not high, the good news is that there are millions of people like you, so you're not alone. We don't ever want to feel alone now, do we? The bad news is that this will, if it already hasn't, have a bad effect on your will to borrow money. Improving your credit score takes time, and the fact that you clicked on this video is a step towards the right direction. Welcome to the Money Wizard channel, where we teach finance tips to better your life. Don't forget to like, comment, share, and hit that notification bell to stay updated. In this video, I will go over some tips and steps you could start taking immediately to increase your credit score. We actually have more than one credit scores, but the more popular one is your FICO score. No need to worry about the others, as they all follow a very similar model when it comes to calculating your score. In a nutshell, most scoring models looks at your payment history on your loans, the percentage of credit you use on each card, how long your accounts have been opened, and the types of accounts you have. Let's take a deeper look into this. The first step you should do is to check your score online and analyze the report. A popular app is Credit Karma, and now some banks offer this feature on their banking app. Now you can see which factor is having the most negative effect on your score. This alone will tell you what you need to work on. Be reminded that if you do make any changes, it will not be reflected on your credit score immediately, so be patient. Give your creditors time to report these changes. Upon analyzing your report, you should take into account that certain factors are considered more important than others because some has a bigger impact on your score. Two factors that are more important than the others are your payment history and your credit utilization. These two factors alone will affect your credit score more than 60%. Lenders are looking at how dependable you are from how often you pay your bills on time. The logic behind this is that your past on-time payment is a good enough assumption to say that you will continue to make those payments on time. Settling an account for less than what you agreed on will negatively affect your score. Late payments stay on your report for several years, but if it puts you at ease, older late payments have less effect than recent ones. With that being said, if you fall off, just get back on track, as life can be unpredictable. The second biggest factor that has a huge impact on your credit, as mentioned earlier, is your credit utilization ratio. This number is calculated by adding all of your credit card balances and dividing that amount by your total credit limit. Lenders look for this percentage to be less than 30%. This shows the lender that you know how to manage your credit by not maxing out your credit card limit. You can positively influence your credit utilization by paying off your debt full if possible each month, or keeping the balances low. If you are someone that has no credit at all, an option for you to start building your credit would be to become an authorized user. Become an authorized user on a person's account that knows a lot about credit and keeps his or her credit score high. An authorized user can be a great step for beginners to establish credit. In the case of the user having any bad transaction on their report, you can have that negative mark removed being an authorized user. Just make sure you know this person very well and trust them enough with this. Avoid opening up new accounts just to increase your credit mixture. This can do unnecessary harm to your credit, like creating too many hard inquiries on your report. Let's quickly go into detail about a hard inquiry versus a soft inquiry. A hard inquiry is when a lender reviews your report to help make the decision on whether they will give you the credit or not. Some examples of when you will get a hard inquiry is when you apply for a loan, credit card, or mortgage. Hard inquiries stay on your credit report for just over 2 years while lowering your credit score by a couple points. A soft inquiry is when you receive a credit card offer in the mail, or a potential employer performs a background check. To sum up the difference between the two, a soft inquiry doesn't stay on your report because you're not applying for new credit, and hard inquiries show up because you're applying for new credit. Check your credit score monthly to make sure that the hard inquiries that come up are in fact from you and not fraud. The good news is that these hard inquiries will be removed from your credit after 2 years. The bad news is that they actually stay on your credit report for 2 years, so still be careful. Only apply for credit when you need it, and do your shopping around before you actually apply for any loan or credit card. Check your credit reports at all 3 credit bureaus for accuracy, and if you find anything inaccurate, call to correct it immediately. The 3 bureaus are TransUnion, Equifax, and Experian. Keep unused cards open because having the same amount of credit limit while owing less on them will increase your credit score. Closing accounts may also increase credit utilization, which is not good. Your credit utilization should always remain low. One last method you can use to increase your credit score is to add your utility and cell phone payments to your credit history. You can do this by using the Experian Boost tool, which allows Experian to add payments from your service provider. They will check your payments all the way from 2 years for accuracy, and immediately after you do this your credit score should increase. This extra feature is free, so you have nothing to lose. Overall, a good credit score helps you qualify for the best interest rates, or even affect how much you pay for life insurance. Landlords are now considering your credit score when you apply to rent an apartment. If you're looking to lease a phone, some telecom companies now may check your score before they make you lease it. Your credit score is important to your overall financial well-being, so it is best to do everything to ensure your report is in good standing. Now that you know the basics on how to increase your credit score, you can now make a plan to start increasing your credit score. Thanks for watching the Money Wizard channel, and I will see you in my next video.